Hi everyone. We wanted to go ahead and just do a live Q&A session today again. We've got some questions and some things that we want to review. So this is going to be around 15 to 20 minutes. So first off, we're going to start, we've got an agenda here, kind of a market economic update, then going through the CARES Act, some new things there, and just some general planning question and answers that we've been getting frequently. And then again, just a summary of resources that we have for you. So we've got the whole team here, Rob, Trevor, Steve, and myself. We're each going to talk us through some different things. Just kind of a quick initial update on, I guess, our team and just personally, we're still working with clients virtually, new clients, existing. So really anything that you need help with or any questions that you have, please don't hesitate to reach out because we can continue to do everything that we did before. It just means that we meet by screen instead of in person. So that's really the main difference. So let's go ahead and we're going to get started here. Rob, why don't you go ahead and walk us through and give us kind of a market economic update? I know you've got a couple charts for us.
Sure, absolutely. Yeah. So really, I mean, it's been with everything going on with the economy and in the news with COVID and everything, you would expect that things would still be really volatile and economic data has been coming out and it looks really bad. But what's really remarkable, if you look at really since about a month or so ago, the stock market really has not been moving that much. So we had the big downdraft in February and March where it dropped 35% in a month. And then it came roaring back in late March and early April. And we've kind of been sitting in a pretty tight range ever since then. So if you look at this chart here and what I shaded, from top to bottom, that's only an 8% range, which really is not that big when you kind of consider everything going on. So, and you see the same thing with interest rates as well. Interest rates came down really quick, but if you look at like 10-year government bond rates, they've been remarkably stable as well. So, it's just a reminder that, even though you flip on the TV and cable news channels, it seems like the world is ending every other second, but really the stock market has been pretty stable here. So, I think we should probably take some good comfort in that. And then in terms of the weekly blog that we did this week, flipping to the next slide, we decided to kind of put some good news out there. The last several weeks of blog posts have been, talking about how bad the economy is and things like that. And so we set out this week to show something positive. And I think this is a really good indicator and at least gives us some hope that things are starting to normalize. So what you're seeing in this chart here is demand for gasoline. So, I mean, people filling up their cars, companies filling up their trucks, things like that. And what this chart shows, the blue line is what's happening right now. And then the orange line is what gasoline demand looked like a year ago. And you can see pretty clearly that right after the early part of March, when stay-at-home orders started to put into effect and all that, you saw gasoline demand just fall off a cliff. So, it fell about 45% lower than where it was a year ago at its worst point in April. People not working, not going out, companies not doing deliveries, really had a huge impact on gasoline demand. I mean, this is a really historic drop we saw. And of course, prices came down with it. So in our area, gas prices got down to $1.50 a gallon. I know places in Wisconsin where I'm from that got down to 99 cents. So prices came down along with it. But what's interesting is the last 3 weeks, we've actually seen an uptick in the amount of gasoline demand. And it's still well below where it should be for this time of year, particularly right now. I mean, we're at Memorial Day. A lot of people usually drive around. But this is at least showing us that things are starting to heal. And how long it takes to get back to normal is anyone's guess. But we at least wanted to show, some indicator, some real-time indicator that things were starting to turn around.
Yeah.
And then, yep.
I was going to say, Rob, yeah, it's interesting because it's so hard as things were going down. We were saying, there are reasons. So it's hard because there were reasons why things were, and just trying to explain that, but also looking for those indicators. This is really helpful. Sorry,
Yeah.
you were gonna say something else too.
Yeah, yeah. I was just going to say, if you haven't filled up your tank in a while, it would probably be a good time to do that. As demand is coming back, prices are starting to creep back up again. So, to the extent you need to fill up the tank and you haven't done it because you haven't been driving, try to get out there and at least top it off.
That's helpful. I feel like all those little trips kind of add up. So by now, if you've gone out a few times and come home, maybe you're getting close to empty. So it's time to do that. So thanks for
Right,
the heads
right.
up.
Yep.
That's great. Thank you.
Yeah.
And then Rob, do you just want to touch on, so you'd kind of mentioned this, so this is today's blog post where you updated this measure here. And then I know, just looking ahead, in our monthly newsletter that we mail out each month, so it's a hard copy newsletter, you actually just kind of give us kind of the story of the Fed and going back and looking at that, right?
Yeah, yeah. It's so we'll have our monthly newsletter coming out next week, and I decided to kind of write something a little bit different. It goes beyond the normal. Here's what's going on in the stock market, and I really want to, more to help everyone understand what's going on. The Federal Reserve, as you know, has cut interest rates to zero. They're doing a lot of unconventional things that, quite frankly, 10 or 15 years ago, people never would have imagined that they would be doing. And so I decided to take a step back in our monthly investment newsletter and really look at what the Fed has been doing for the last 30 years. I mean, we're going on our third major economic crisis in the last 20 years. You can argue this one's different because it's kind of caused by a virus, so it's not quite the same, but just given the severity of the job losses we're seeing and the loss of economic output, I think it's helpful for us, as not only as investors, not only as clients, but just as citizens of this country, to really understand what the Fed is doing and how that is, in my view, increasing the risk in the economy, so that every time we have a hiccup, the stock market is collapsing, unemployment is, shooting higher and things like that. So, it's when that comes out, I invite you to look at it and, don't read it from the standpoint of like, okay, what stocks are we going to buy after this? But just, really, I think, understanding what the Federal Reserve has been doing and how a lot of its policies and actions, I think, have increased risk for investors overall. So that'll be out middle of next week.
Thank you. Yeah. And it's interesting because you end it, really with that. These are the things that we look at for our clients when we're investing. So like you said, not that you would make rash changes or decisions based on it, but that this is what's all important when you're choosing where to invest for the long term. So thank you. That's really helpful.
Exactly.
All right. Great. So we're going to shift gears a little bit here, and we just want to update you kind of on the tax side of what's been happening, what's been changing, maybe what you've been seeing. So we're going to let Steve give us an update here.
Yeah, so this is an update both for our small business owners and individuals. So first we'll start with the small business owners. The CARES Act brought about two different stimulus packages. The first was the PPP, or Payroll Protection Program. And that created funds that were allowed to be applied for, and if granted, you would use them for business operations. And that first round of funding was exhausted. The government then passed a second round. And as an update for our listeners and those watching, those funds are still available. So if you own a small business, maybe you didn't apply or you were rejected in that first round, those funds are still available. And we've actually heard some stories where banks have been reaching out to clients who haven't applied and saying, if you need help, we'll help you through that process. So there's some success stories. Some people have recently been accepted. And as long as those funds are used at least 75% for payroll, they can qualify for forgiveness. So a grant rather than a loan. So that's really the first update. The second update, then in the related to the PPP program is that the SBA, the Small Business Association, has recently given some guidance on what needs to be done in order for those funds to qualify for complete forgiveness. So there's a link that we're including here in this on this slide, and if we can be if we can assist or be helpful for you, please let us know that. And then the second update is related to our individuals. So physical checks are actually being cut and mailed out. We've received notice from a few of our clients that those have been received in their mailbox. If you haven't changed, so that was if you didn't elect to have those direct deposited. Checks are in the mail. If you did have those elected to be directly deposited into your bank account, those are also on their way. And if they haven't already hit, you can actually follow up on that using the IRS Get My Payment tool. So if you go to the IRS website, type in Get My Payment. I think it's even on the front page. You click on this tool, you enter some personal information, all of it you know. Social Security number, date of birth, personal address, and it gives you a status update on where you are in that payment process. If it's still being calculated, if it's in process, if it's already been deposited, it'll let you know that. So that's a really helpful tool that the IRS has put out. If you have any questions, you can check out that website or let us know.
Thanks, Steve. I would say too, in the beginning, if you had checked out this Get My Payment tool and it wasn't helpful, or you found that it didn't work, it seems like, would you say things have been working better than they were in the beginning? So maybe recheck.
I think a lot of it was just the website being overwhelmed with people checking. So yes, they've updated it. Seems to be working. I checked it this morning, and yeah, everything's smooth.
Great. And then also I think that applies also to the PPP funds. If you found where you qualify because you're a business owner and you meet those criteria, and you've gone to your lender and you've tried to apply and you've gotten denied for any reason or anything like that, but you qualify, just keep trying, reapply, or if there's another institution you've ever done business with, maybe try applying there. You're only going to get funds through one of the applications. So, but just be sure if you qualify for these things, just be sure that you're looking for those answers and that you're asking around. If it matters, then don't take no for an answer when you know that there should be a way. So, or if we can help, let us know.
Yeah,
so I wanted to be sure people know that.
Yeah, what we've been telling clients is start first with where you have a relationship, the bank that you currently work with, or those that you have some type of contact with. If that doesn't seem to be working, there's other methods and other banks that will help throughout that process.
Okay, thanks. Great. So hopefully brings some hope to people. So thank you, Steve, for those updates. All right, then we're going to move to Trevor. So we've gotten to some other financial planning general question and answers, and basically some of these we just keep hearing. So we want to be sure that we send this, we let people know some of those answers. All right, Trevor, I'll let you go ahead.
Yeah, absolutely. Thanks, Michelle, and apologize for the dogs barking in the background there. Yeah, so first and foremost, this is a question we've actually gotten twice in just the past week, and as we're talking through HSAs, we're big proponents of health savings accounts, just because of the tax advantages that they have, but also their ability to roll over year and really build a nice, great nest egg for you to use in medical expenses in future years. So we love these accounts, and we love to help clients, implement them and make the best use of them. But one of the questions that comes up is, okay, well, what happens if you leave your employer? So most HSAs are provided through your employer, and it's really concerning to say, okay, if you leave that employer, what happens to those funds? And the short answer is, these are your funds. Like, nothing happens to them. Your employer doesn't get them. They are very much treated just like your 401k would be. In the respect that these are your funds. There's not even vesting requirements associated with these. So any dollar amounts that are in there, you get to use for your benefit. Now, when it comes time to leaving your employer and taking your HSA account with you, you have a couple of options. You can roll it to a new HSA provider, and there are a couple of different ones that we like to see or whatnot. They all have various different benefits and costs and fees and whatnot. So we'd be happy to go through some of the options you might be looking at. But when you roll it to your own provider, you really get to kind of have much more full control. Another option is, with your new employer, if they have HSAs, there's a good chance you can roll it into your new employer's HSA plan as well. So if you have specific questions about your own situation, let us know with that, and we can kind of walk you through each of those steps. The next one is, especially with, emergency funds really becoming such a big paramount thing right now, with wanting to make sure we have cash on hand, we've often been getting asked, where's the best place for that? And one of the things that we would kind of recommend doing is take a look at first, the banking relationships that you have. Although that said, if you bank with a brick and mortar bank like a Chase or Bank of America or US Bank, the challenges you might face there is you may not get very much in your interest. So the interest that you might see in some of those brick and mortar banks is maybe 0.25% per year, which really is not much. I mean, rates are already low as it is, as Rob mentioned. The Fed has cut rates down to 0, but there is still some money to be had in interest with these accounts. One of the ones that we like to recommend to clients on a regular basis is the Capital One money market performance savings account. And what's even more nice about that is they've actually got a promotion deal going on right now that for every $10,000 that you contribute to that account, they'll actually give you an extra $100 up to $500. So if you deposit $50,000, they will give you $500 in return for starting that account with them. So if you'd like to take advantage of that, or you're interested in learning more, we provide a link there on the slide for you. We'd also recommend that you take a look directly at just a Google search for the promo code SCORE500. That's going to be an important piece to make sure that you do get eligible and taken care of for that promotion deal. And then finally, just the third big question we've been getting a lot is it now a good time to refinance? And this is something that we've talked on a number of times, probably even in prior videos and webinars or whatnot. But Michelle did a wonderful video with a referral resource that we use quite frequently here, Tom Cramer. And we've actually got those YouTube videos posted there, so you can go take a look at those. Even better still, so our very own Rob has also done a refinance video. So those are really awesome, important videos to walk you through what are the things you should be looking for, whether or not it would be a good time to refinance, or hey, maybe it's not. Maybe you want to wait a little while to really take a look at that. So yeah, those are the big three questions we've been getting.
Great. Thank you, Trevor. That's a great kind of synopsis of that. I would just maybe highlight a couple of things. So on that money market with Capital One, that is, I believe you have to apply for that by May 31st. And so there, just be sure, because this is a really timely suggestion that we're making for that promo code. And that's why maybe it may be a little bit hard to find. So be sure that you search for, SCORE 500 promo code, like Trevor mentioned. But that one is one you don't want to waste time on if that applies to you or you want to take advantage of it. And then, yeah, the refinance videos or any of these videos you can find anywhere. So thank you for highlighting those. But yeah, that was really helpful because these are general questions we keep getting. So
absolutely, yeah.
Review them for everyone. So thank you. All right, and then like Trevor mentioned, one of the videos, we just want to kind of point out all of these resources that we've been creating that you can still go and find. They're still posted, they're still available on our website, on Facebook, on YouTube. You can find them in any of those places. So just to highlight those topics, and really we're doing these videos because if we're all at home and we still need to do something, or we think there might be a benefit that we could take by looking into these things that we pay for on a regular basis, if that's insurance, so property and casualty. If you need estate planning documents, whether you do or that becomes necessary during this time, we just want you to know that these resources are available. And so that's why we're talking through all of the details and what's changed in these areas. So that's why we've kind of brought these resources to you, because you can't just do what you used to do. You can't just drive up, but you can absolutely call any of these individuals. And that's why we've brought you some of this information. So maybe answering some of those first questions that you have before you reach out. So here's a few videos, And then also just letting you know that our team, while there's 4 of us, our team exists, and it also extends beyond to these resources that we send you to. So we realize that you need these things, and we don't sell any products, so we need people that can help you and take great care of you. So that's why, you know, we're bringing these individuals to the forefront to you so you can see them. And then finally, just to summarize, you know, as we think about how long we've actually been home, we're going on 2+ months. I think it's 70+ days as I was counting the other day to write that. And there's a lot of things that when we look back, we've created, and we really just want you to be aware of what's out there. So if there's anything, you know, I think we find ourselves even saying, oh, I missed that was available. So there's things that, you know, we've even talked internally about. So we just want to always point you back to these. So market updates, Rob's always writing every week on something that's timely and pertinent going on in the market. And then CARES Act, the 15-page resource that we had put together a couple months ago now, those all still apply, any of those sections of that. And we've got some live videos that actually talk about each section more in depth, so you can find that on our website as well. And then these live video updates that I just mentioned, this is just a great summary of all of these resources that we provide. And I know we just talked about our monthly commentary that Rob mentioned he just wrote, but this is a monthly newsletter that's 8 pages long. We go through a variety of financial planning topics, and then also it gives Rob a chance to write a little more in depth, so he can really write longer on something to really explain something where, you know, usually we write a little bit shorter and want you to be able to kind of digest it quicker. But this gives us the opportunity to really extend that so you can understand a bigger item. So if there's any of these resources you need help getting pointed to, or any help that we can provide, please feel free to email our team. It's team@financialdesignstudio.com. Please just send that, we'll all see it. And that's if you want to get added to our mailing list or our email list for those weekly market updates, really for anything we can help you with. So thank you for joining us. We hope these have been helpful. And again, let us know if you have questions, and we can answer them on next week's call or in a couple weeks coming up. So thank you guys for all explaining everything, and we'll talk to you soon.
Have a great weekend.
Bye-bye.